Hey everyone, Couch Investor back to another video for today. So as promised, let's talk about GM and their latest earnings report. Now, if you think I'm going to bash GM throughout this video, forget about it, it won't happen. There were some positive things, but of course the positive things the mainstream media picked up pretty fast. The red flags, the negative stuff, they don't want to talk about it because it is GM and not Tesla. Let's be honest, that's just the way it is. Now, in a recent video yesterday, actually on Saturday, if you missed that video, it's going to be on the top right corner, talked about Tesla, the inventory issues there and the issues with the Model 3, more numbers about China. If you missed that video, it's going to be in top right corner. Now, of course, the current macroeconomic environment is not great. We've seen this with Tesla, we've seen this with BYD as well. So seeing it with GM is no surprise, right? It's not surprising. But what is surprising is the direction that a couple of segments and business segments are going to. Let's start with the Chevy Bolt, for example. In the shareholder letter, they say here, we delivered more than 20,000 EVs thanks to the third consecutive quarter of record Chevy Bolt EV and Bolt EUV deliveries and rising Cadillac Lyriq sales. We are now number 2 in the US market and we increased our EV market share by 8 percentage points. Which is great, congratulations. But during the earnings call, they came out with this. Because of the progress of the Orion Township assembly plant, they say it is now time to plan the end of the Chevy Bolt EV and EUV production, which will happen at the very end of the year. So it's a bit conflicting right now, right? First you make a statement, 20,000 deliveries, gained market share in the EV market, great. Which, by the way, there's no point in looking at gains in EV market since, as we know, you have to look at the gains in the overall car market if you believe that, well, every car will become an EV, right? Right. Anyways, when you say first, congratulations, look at us, we sold XYZ EVs, another record quarter for the Chevy Bolt, and then suddenly in the earnings call you say, okay, you know what? We're gonna discontinue this line and focus on other models. Now, the Chevy Bolt, of course, isn't a new car. It's not an expensive car either. So you could say that, yeah, they just are losing too much money on it and it just doesn't make any sense for them anymore currently, which I would say you're probably right because they just announced this in their shareholder deck. So they will be launching high volume EVs in the most popular segments. So you have the Silverado EV, the Blazer one, and the Equinox here. So of course, trucks, SUVs, they go and they sell it for more money, which means that they can make more money on these cars or at first probably lose less money than what they did with the Chevy Bolt, which fine, you're going after cars that will generate you more profit. But as we've seen right now, cars with a high price tag have issues being sold since the current macroeconomic environment isn't really that ideal to be selling cars that are super expensive. So what will happen next? They just gained more market share in the just EV market. But if you are not going to sell the EV, the Chevy Bolt anymore, my prediction is that you're going to lose market share, probably. And also, by the way, when you announce that you're discontinuing an EV model, probably this is already telling some people, well, maybe I'm not going to buy a Chevy Bolt anymore right now because maybe, I don't know, there won't be any software updates in the future, etc., etc. Could be. Those are genuine fears that people have. And it's not just for GM, it's across the board. Since those are now computer on wheels, software updates for a long, long time will be important. So far, so good. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, would really appreciate that. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Now let's talk a bit more about market share. So in their report, you can clearly see right here that total worldwide, they lost market share. They went from 7.4% to 6.9%. Now, if we go and look at the United States, they gained market share. They went from 15.1% to 16.4%. But when you look at trucks, which is, let's call it the most profitable segment, They lost market share, but they sold more cars. It's just that the market accelerated faster or grew more than the amount that they are selling. So 50-50 there when it comes to positive negatives, in my opinion. But when you look at China, which China is the biggest car market in the world, when you look at China, they went from 10.7% to just 9%. And in my opinion, that's just my opinion, of course, just speculating here, this number will drop. Because in China, they are trying to, let's call it, electrify their fleet of the country. And when you don't really have that many options to give them, you will just not sell any cars there. And of course, when they'll come out with the 3 models that they just announced, whenever that will be, could they handle the pricing wars that is happening right now in China? In my opinion, the answer is no. So China, the most important market for, well, EV players, the big ones at least, BYD and Tesla, I don't really see GM competing there anytime soon. Now, when it comes to global deliveries, especially in North America and especially in the United States, quarter over quarter, they are down. We've seen this with BYD as well, so no surprises that we're seeing this with GM. But remember last quarter we went from Q3 to Q4, so big increase here, or nice increase here quarter over quarter. But what happened there? Well, there was also a significant increase in US dealership inventory. And now in this quarter, although they sold or they delivered 20,000 cars less, still US dealer inventory increased, although much less than before. This still increased. Remember, for GM, they don't really care right now. Well, maybe they do care a little bit, but overall, cars go from GM to dealerships. And then if it doesn't go to the customers, GM already got rid of that car. Now it's the dealership's problem. And of course, we've had rumors and we've seen some pictures already, parking lots filled with cars. Moving up to the next part of this video, it's about Cruise. So their business segment when it comes to ADAS and AV solutions. So in this quarter, it generated $25 million, so not that much. Last year, same quarter, 26 million, so not a big change there. But a very, very big change when it comes to income, or in this case, loss before income taxes. Last year, same quarter, $1.5 billion. This year, this quarter, $588 million of loss, which is good for them. But when you look at the overall income combined, it's basically flat year over year. So if we, let's say, remove Cruise here because we say, okay, it basically doesn't really generate that meaningful of a revenue for the company. If we remove that improvement in income for them, and we just include the core business, which is automotive and GM Financial. Of course, some people would say, oh, well, why is financial a core business? It is a core business, just like energy will become a core business for Tesla or is already a core business for Tesla. GM Financial is crucial for the GM business. Has been for a long, long time. Deal with it. So if we take automotive and financial together, this quarter, this year, last year, same quarter, it's down around 23-24%. And so although they say on this chart or overall, they try to project confidence and saying that the business is doing very, very well, they're only going into one direction, which is all the way up and up and up. Clearly, that's not the case when you dig a little bit deeper. Of course, we just excluded Cruise. It's part of the business, but not really meaningful when it comes to revenue right now, at least. Now, continuing on Cruise, some positive notes here, by the way. So they talk here about leadership in safe deployment of ADAS and AV. So Super Cruise Level 2, Ultra Cruise Level 2, and Cruise Level 4. They say GM is the only automaker with both Level 2 and Level 4 AV technology offerings and a scalable vehicle built for autonomy, ready for production. Now you see, I have an issue with this. Of course, yes, officially they have Level 4. Tesla officially is still at Level 2, I believe. But then again, when you see the difference between Tesla's car and this Cruise one right here with all of these cameras and sensors on top of it, by the way, this is of course a driverless car, which, yes, in the future, robotaxis, the main point of it is it being driverless, but it is super annoying when it gets stuck, and it is getting stuck sometimes, not a lot of times. Sometimes team getting stuck, and since it has no driver, well, you have to wait until GM takes control of the business or Cruise takes control of the business, etc., etc. Now, what is level 4 actually? So, level 4 high driving automation. The key difference between level 3 and level 4 automation is that level 4 vehicles can intervene if things go wrong or there is a system failure. In this sense, these cars do not require human interaction in most circumstances. However, a human still has the option to manually override. Now listen closely. Level 4 vehicles can operate in self-driving mode, but until legislation and infrastructure evolves, they can only do so within a limited area, usually an urban environment where top speeds reach an average of 30 miles per hour. This is known as geofencing. As such, most level 4 vehicles in existence are geared toward ride sharing. They give some examples here, notably Waymo, for example. Now that said, of course, huge congratulations for reaching 1.5 fully driverless miles, approximately 90 days after reaching the first million. They also have 240 driverless AVs running concurrently, which are those cars right here. But if you want to hear my honest opinion, so to conclude, those are just my thoughts about GM's current quarter end situation, and I'm also in the camp of saying that I don't think that GM will not exist at the end of this decade. Ford will still exist. I just don't think they'll be as profitable as they think they will be. Now, when it comes to GM in the next coming quarters, even though things won't look as rosy as they think it will, they'll somehow earnings engineer their way to a positive headline. That's just the way it is. But overall, those are just my thoughts with regards to GM. Leave yours down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.